Peter Rose, Longwood Currency Trading. Why do I consider a $3,600 gain a loss? Well, let me tell you. I just closed out a trade and held it for a while, which I don't normally do. As you know, I'm a day trader. Try to be flat at the end of the day. But sometimes when you have the appearance of good momentum and volatility and stuff, you want to try to take advantage of that so that you go to a longer time frame. And I don't advise this. I don't even want to do it anymore. It's you make the money, but the time frame is sometimes longer than what you would like it to be. And I keep saying you don't get paid for your time. So I made $3,600 on this particular trade. And I held it for the equivalent of 3 months, let's say. So in this particular instance, I'm sitting there with this block of money tied up in this trade that I have all the confidence in the world that it's going to go in my direction. Now, it didn't go in my direction many times. It went many times my risk in the wrong way. But as Jesse Livermore so aptly put out, I'm going to hold the position because I don't want to lose that position. I don't want to get out because I may lose my position. So the thought process in long-term trading is a little bit different than you have when you're day trading. When I'm day trading, I'm going to take a short loss. I'm just going to get out because I know I may go in there another time or 2 times or 5 times more that day, and because I have a good win-to-loss ratio, I can make that losses, those few losses that I'll take, I can make those up. But once you go out to a longer time frame, there's no point in setting a short stop because you're going to be in there for a long time. If you're looking for 100 pips or a couple of 100 pips, you're long term. You're not going to get that in a day trade. It's going to take you anywhere from, well, in the majors with the ATR, anywhere from 80 to 120 pips, depending on the volatility at that particular time. You could make 100 pips in a day. What's the likelihood that you're going to get a 100 pip candle? Well, not very likely. So you're probably going to look at several days of trade, if not several weeks. And in this particular instance, it was, 3 months. And finally, the other day, I gave up on it. There was a $3,600 profit, and it was bumping into some crap. I am so sick of sitting here with this shit. I'm just going to get out. I had an $8,000 profit target, but you just get tired of sitting with this shit, and so you get out and take what you can get, because you can always get back in. So I took the $3,600, I fired it around, I made some trades, I made $50 and got out, and then waited, and then I'm back in. I'm a little heavier than I would like to be as far as the load that I'm going in with, but I've got what I think is a short-term goal of a couple of $3,000, about as much as I made waiting 3 months. But the reason that the $3,600 I'm considering a loss is because it's not a loss of money, it's a loss of time. It's a loss of opportunity. Well, I'm waiting for this and tying up a ton of capital with this trade, feeling strongly I'm not going to lose my position because I'm ultimately going to make up whatever this profit target thing was. The fact that you take the $3,600 and you divide it by 3, and you come out with basically, about $1,000. Let's call it $1,000, a little $1,100 a month. That I made. So I make $1,000 a month. Basically, sitting in front of my computer for 15 minutes and making the trades and letting them sit. You say, well, that's pretty good. Well, do you want to tie up that much? This is a $60,000 full load position. I was 6 full lots on it. So the issue then is I make $1,000 or $1,100 a month for 3 months to get $3,600, a little over about $1,200. But if you divide the $60,000 into the $1,200, you get about 2%, which is great. Where are you going to get 2% a month? Okay, that's 24% on my money a year if I just sit there for 3 months at a time. But it's crazy because you could make 2% a week. I'm not advocating that you're going to be able to make 2% a week, but you damn sure ought to be able to make 2% a month without waiting 3 months to average it all out, right? So the time opportunity that I lost by being in that trade, what I should have done is when I had a couple of $1,000 loss against a trade, I should have just said, screw it, I'll just take the $2,000 loss. At the time that I put that trade on, I was up $600 or $700 for the day. So I take a $2,000 loss. I've got a $2,000 loss there. I got a $700 gain. So I'm sitting with a $1,300 loss for the day. Well, okay. It doesn't take that long to make that up. I can do that in 3 days, 4 days. Instead, you sit there for 90 days. Well, if I could do $200 a day, 5 days a week, I'm making $1,000 a week, and I end up making $1,000 a month by having the carry trade. Now, the buffoons out there can say, well, you just don't know how to fucking trade, Peter, and, you shouldn't have taken those losses and held on to it that long, and, you really don't know what you're doing because you clipped your profit to $3,600. It's your own fucking fault, because if you'd have let the thing run to where it was supposed to run, you'd be okay from a percentage standpoint. And, oh, by the way, you were pretty stupid to hang on to that trade as it went against you. Put your money at risk. Sit down. Your time is up. Fuck you. I put my money at risk. I'm trading. What are you doing? Don't criticize it. Don't bother to send me stupid comments about, I don't know what I'm doing. I made $3,600. Cabo. I'm not happy with that because it doesn't give me the return for the time that I put in. That's what the point of the video is. If you can trade short term, you can also trade long term. It's just that you have to have a better sense of how to set your initial stop, how to stage into the position as it moves in your favor, and how to trail that stop. Those are all questions you don't have to deal with when you day trade. If I'm trading a 6 lot, I can go in with a couple of lots and I'm shooting for 10 or 15 lots for the day. I go in with a couple of lots, I pull one off at 5 or 8 pips profit, move my stop to break even and let the fucker run. And if it is running pretty hard, then boom, 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 I go in and I stage my position in. But I'm not staging in as the thing is moving against me to get a better price, because that's exactly what happened with this long-term trade that I took. And I'm going in pretty heavy with lots so that if I leave the price room to breathe, I'm going to lose 20 or 30 pips. Well, if I happen to be in that statistical 6 losing trade run that I'm going to do, I'm 60 and 30, $1,800 a pop, and I do that 6 times. That's like $8,000 that I'm going to go through by letting the price breathe. Why not day trade? Set my stop, as I have advocated on the 5-minute chart, to 8 pips. If I got an ATR of 5 pips and I lose 6 times in a row, it's 60 times 8. I lose $480. I can make that in a day when I hit them right. So why then would I delusionally go into carry trades? And that's the problem, and that's the issue. And that, boys and girls, is a reflection of 40 years of real estate investment, which is buy and hold. I retired a millionaire because of buy and hold. I think that there are times and places for long-term investments. I think there's vehicles for that, stocks and bonds and real estate and cars and shit like that. But I think the markets of futures, options, currencies are better suited to the shorter term speculation or day trading because of the volatility and the price and the amount of leverage that you can come up with, that you can maximize those gains. Why would I trade a scenario like that to hold a large position for 3 months to average out making $1,200 a month when I can make that in a week? Why would I do that? Again, it's because of the really, really strong instincts that I've developed in 40 years of real estate investment. 40 years of doing something and knowing how to do it and knowing how to go through the bad times and work my way through. The timing in real estate is different than the timing in currencies, and I've been really upfront with everybody about that. Nobody out there, none of you have that problem. Well, I've had calls from folks who are in real estate, and they're going, oh, I can't figure out why I can't do this. I go, I know why you can't do it. It cost me $40,000 to learn why I couldn't do it. I go, duh, I've got this. So the trading's a lot of fun, and I have a lot of fun. I mean, I'm not saying that I'm going in too heavy, too early on trades that I'm looking for a long run to a profit target. When I went into that trade that I held for 3 months, I ended up with 6 lots. I didn't go in with 6 heavy at the start. I staged in. I did the right thing. But it was, I hit the thing in a period of great world and economic uncertainty. And so the price would go up, I'd pick up a lot, and it would go down, and I'd be in the negative territory, 50 pips. I go, well, you know, I'm just going to hang on to this. Price starts to come up, and I don't like to really do that, is to buy in as the price is returning to where my average is. That's averaging down, going the opposite way, and I'm just not a real big fan of that to build a position, because what happened is that the price that went back up, I went in with another lot, and it collapsed and fell against me. And then it comes back up, and it went into profit. Oh, okay, good. That's a good thing to do. I go in with another lot. Down it comes, 80 pips. And then you go, well, it'll come back. Real estate comes back if you time it right. I mean, I've lost $1 million twice in my life, net worth twice, and it took, I came back each time, but it took me 10 years each time because I knew how to play the real estate game. So I didn't lose assets, I just lost net worth, and I had the assets remaining. That's what Livermore talks about. I don't get out because I don't want to lose my position. So when the whole world goes to shit and everybody's selling their real estate, I'm not. I hold it. I lose my net worth, but I never went to bankruptcy stuff. I just went to the wood, you know. And they just got to wait 10 years for it to come back, or 5 or 6 years, whatever. It depends on the market. And so those are really instinctual things that I know how to do long term. But there's so much more opportunity. I mean, you can't get in and out of real estate that quickly. I mean, you could flip, but you can't trade real estate like you could stocks or futures or currencies, because it takes time for somebody to look at the property and say, oh, you know, I don't like the color in the bedroom. And you just can't do that. You're either going to flip real estate or you're in there for the long haul. And the long haul, boys and girls, is not 2 or 3 years. That's insignificant. If you think you're going to buy a piece of real estate and hold it for 3 years and say, oh, well, real estate in my area is appreciating it, let's say it's 10%. Well, you know, you're going to double that. You're going to get a 50% return on that down payment money over that period of time. The property will go up, you know, 8 or 10%. So you're getting a good return on that. But then when you go to sell that and you get hit with a capital gains tax of 20%, 20%? Really? The properties, listen to me, the properties at best are appreciating at 10% a year. So you hold it for 3 years and you sell and you lose 20% of those 3. So you lost a third of your time in there, the third of your money, to taxes. And then you're going to have to pay state income taxes on that as well. I just got caught with that. I had to write a check for $80,000 because accountant didn't remember that I had state income taxes to pay on a previous transaction that I had made. But if I would have held that for 4 or 5 years, I would have gone, geez, I didn't really make a whole lot of money on that when I cashed out. But because I held the thing for 20 years or 30 years, it was an aggravation to have to write that check, but it was okay, you know? But you look at the currency markets and the opportunities that they provide. Why would you go in and hold a position for that period of time? Even if you say, well, if I get my entry right, and you know, I mean, setting a stop loss risk on a long-term hold, you're going in there with the intent to long-term hold, is a really dicey thing. You're going in and trading on a daily chart, let's say, and you're going to hold for 3 months, then you want to get 300 pips. What are you going to do? Set a 20 pip stop? 50 pip stop? 100 pip stop? Well, where are you going to put your stop? Where are you going to let that price breathe? Well, you better get a 2 ATR anyway. Well, that's 200 pips. You lose 200 pips 2 or 3 times in a row, 4 times in a row, you're screwed. So you really have to have your entry right so that it never goes to that stop point. That the entry is solid enough so that it might go 10 or 20 pips against you and turns around and it starts to go up. And then you go, okay, it's going up. I'm not losing too much. I'm bringing my stop up, and that's it. If it doesn't work, but that takes real discipline. You're not going to do that with a couple of years of trading experience. You're not going to have that discipline. Your greed's going to take precedence over your fear. See, are you really going to be able to do that? I did it. I held the thing for 3 months. I made $3,600. Great. I mean, I'd be a hero if I made the $3,600 on a $5,000 account, right? Or a $10,000 account. Well, maybe I could make $3,600 on a $10,000 account if I hold it for 7 months and it goes 400 pips in my favor. How many times is that going to happen? How many times do you think that's going to happen? That's why the $3,600 that I made yesterday in closing that trade out, although I closed it prematurely and I still think it's going to go to that initial profit target, and in fact, the position that I'm in right now is supporting that, and it's going against me because there's a lot of volatility and movement going on. But that's just the game that you play. So that's why I say that the $3,600 gain was not, it's a loss, because I lost 90 days of time where I could go and picked away and use that money to make $200 a day. $200 a day is easy when you have that size account. I mean, it's 5 pips. That's all it is. To make $200 a day, I can do that all day long. 5 days a week, $1,000 a week. Add it up. It'd be $12,000. If you understand trade entry and you've got your analysis down so that the number of times that your stop gets hit, you can make that up. But if you're going to choose to do a carry trade like I did, you better be better at it than I am, because and you probably are, because you don't have that real estate survival instinct to deal with. You might be able to come out of it better than I can. I just feel, in looking at both the real estate market and looking at the currency market, two total things in totally different opposite directions as far as the risk and potential amount of money that you can make when you get it right goes. If I was to say, if I walk outside 15 feet and I pick up $5 bill every time I walk out 15 feet, or I can walk through the woods where there's bears and antelopes and stuff that are going to kill me, but I can walk out in the woods for a half a mile and pick up $100 or $500. But there's some really bad juju out there that's going to get me. Why would I walk in the woods to do that? I could only do that once a week or once a month to get that $500. All I got to do is walk out my door and pick up the $5 every time I do that. I do that 10 days in a row and I've made the $500. No risk. I don't know, boys and girls. I don't know. All these guys out there that are on the videos that you're watching, they're all preaching a different tune. And good luck. Good luck. I mean, I'm not saying that they're not doing it. I'm saying that they've got far more experience doing it than what you may have, and you may want to rethink your profit target goals, the methodology that you're using, the structural constructs that they're using in order to do your analysis on your trade entry, which really determines whether you're going to be successful or not, regardless of whether you're doing short-term scalping, position trading, swing, whatever it is that you're doing. If you don't understand that, you're screwed, because the price is going to move against you, and you've got to have rules to deal with that. And those rules are going to be dependent on the type of trader that you are, and the type of trader that you are has to be dependent on your character and your personality. And if you don't have somebody to point all that stuff out to you, you're going to figure it out for yourself. It cost me $40,000 to figure it out for myself. I'm a pretty bright guy. Degree in physics, 33-year career as a software engineer, 40 years in real estate, 50 years in the martial arts. I think I pretty well got my shit together. Education's expensive. Do it as intelligently as you can, because it's not that tough. I tried to make it tough because of the real estate and the computer programming and all the other stuff that I do that are complex. I thought this was a complex thing. And it was the complexity in my mind that clouded me from seeing the two different approaches to the trading. You're going to long term or you're going to do short term. Here's the benefits of the long term, here's the benefits of the short term. Not only can I see technical reasons for the short term being safer, but I can also see that my personality is more suited to that. So if you want to sit on a trade for 3 months and make the equivalent of 2% a month, I can't help you. I'm not the guy to listen to, because that's not the stuff that I'm chatting about on this channel, and it's not the way that I trade 95% of the time. Except when I get stuck in one of these long-term trades, I don't do any other trading. Why? Because I only trade one thing at a time. Things have to be simple so that I can focus on what I'm doing. If I wouldn't have been focused on that one thing, I wouldn't have made the $3,600. I've got the $3,600 in the bank. It's gone, cash, done. The fact that I didn't make a good percentage return on it is immaterial. I'm $3,600 up. That's a lot of good wine, a lot of good party. It's a vacation. it's 20% of what somebody may make in 6 months that's really working for a living. So I appreciate that. But for the capability of the currency market to hold that trade for that period of time, for that percentage gain on the underlying asset behind it, is not sufficient for the risk taken. Something to think about while you sip your coffee. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.